Two Bulls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face. Well, hello everybody, and welcome to the China Shop. We are kicking open the doors to talk about another big piece of news that just dropped today. I've got Eric from ES Invest joining us. How are you doing today, Eric?
Dude, I'm doing swell. I'm doing better than a fly on a piece of shit right now.
Is that what flies like?
I mean, have you ever seen a pile of shit? There's normally flies all over it, so I have to imagine yes.
I didn't think they were that discerning.
Well, fine. Maybe we'll do like a dung beetle around a piece of shit. How does that sound? That's in that dude's name.
So what was the big news today, Eric? What is everybody all talking about?
I think it might have been that I'm gearing up for a PR on deadlift, and I think a lot of people were really buzzing about that. Maybe that was it.
I thought it might have had something to do with North Korea losing their minds again, but I don't think that was it either.
I think Big Daddy J-Pow just dropped some bombs today, my dude.
Oh my God, that he slapped a rally right in the face, like just
Dude,
5-finger bitch slap.
it was awesome. And the market movement today was fascinating. So I'm sure your listeners obviously know we're referring to the FOMC rate statement today and then the press conference.
Mm-hmm.
And the market movement around this was profound. As you and I have talked before, I am a nerd, dude. Like, I really like looking at this stuff. And I've looked at the past 40 FOMC meetings now. I keep expanding further and further back out of curiosity.
Mm-hmm.
And I look at the intraday price movement around FOMC meetings. And what we saw today was extremely unique in that before we got the announcement in the, let's pull up SPX real quick. So in SPX, we were hovering, let's call it like 38.30, maybe 38.35, 40, somewhere in there. We rallied up to a peak of 38.94, and then we ended the day down 37.58.
Yeah.
Huge intraday moves. Absolutely fascinating stuff. And, I'm stoked to talk to you about it because there's so much to dig into here.
What was crazy was it made a couple different trips, it seemed like, from top to bottom of like the current area that it's been rotating in.
Yeah.
Like it seemed like it tested the low, it shot up, tested the high, came back down, tested that low, tried to shoot back up again, and then it just, I think as Powell continued to talk, it just got more and more hawkish as it went on.
Exactly, dude. And that's actually one of my hands down favorite things about the markets is that we really have this super cool thing where we can observe pricing happening like real time. Because as the guy is opening his mouth and words are coming out, literally everybody across the market is trying to understand the implication of those words and then discount a future price to where we're at now. I love watching price action like today because it is a primetime example of exactly that. We are synthesizing information as it's coming out. I was actually really blown away by the pre-release news that came out pretty much at 11 is when we had that huge candle. It was a low of 38.34 and a high of 38.65. That's on a 1-minute candle. And that obviously, that's right as, the presser started. And I was like, oh, interesting. I wonder if something, like they leaked anything. Was there like a pre-read that I missed? And again, it's just markets pricing, which is just such a fascinating function.
Well, I mean, maybe somebody did get their hands on the statement because the statement I thought made it sound like there were hints of the potential to slowing the pace of rate increases. And I think everyone was kind of hanging their hat on that. Like they thought the end was in sight.
Well, and I agree with you also in just the messaging from the rest of the Fed leading into this.
Mm-hmm.
a lot of other Fed members have been talking about, like, hey, maybe we don't necessarily need to be this aggressive, or does it make the most sense to continue these, essentially pre-established 75 bips races? And I think a lot of people started overvaluing the other Fed people's opinions realistically, because at the end of the day, like, Big Daddy J Powell's the dude. So,
But also, too, wasn't it unanimous to vote for the 3/4 75 bit hike?
yeah. Oh, and I think for November there was there was just about no other outcome expected. Not to say that it couldn't have happened, but I think that would have shocked the market like big time. I think the main thing is the forward messaging, because already the market, in my opinion, is priced in as 75 basis point raise for some time now. I think the market movement we saw today is far more about December and 2023,
Right.
as compared to anything that happened today.
So what are the estimates now, or what's the market predicting for December? I think before the hints had been there'd be a 75 bip in November and a 50 to end the year. I think that's what everybody was expecting. But
And I think that is the prevailing trend. So it looks like going forward, I'm looking at the futures right now, and it looks like a slight probability preference to a 425 to 450 target rate. That's in basis points.
mhm.
So that puts us around that half a point increase. There's even a higher probability than I thought for 450 to 475, which is actually kind of surprising to me.
Well, I think Powell even said in the press conference that interest rates may need to rise above the previous estimate. Let's see what the actual statement was. Yeah, they may need to rise above the 4.6% previously estimated.
Which is wild,
Yeah.
because he really, I don't want to say that he's on like a warpath or anything like super inflammatory like that, but it really does surprise the living shit out of me, like how resolute he is on this path, especially because most of the economists that I respect their opinion, they're thinking that we might have already over tightened.
Yes.
And then Powell came out today saying, I don't think we've over tightened. And that's terrifying, right? Because there's really smart economists that are saying it already happened. And then Powell is saying, I still don't think we've done it yet. Ergo, there's a good chance that we're going to continue this very restrictive policy going forward, which obviously the market is trying to tango with.
I'm trying to see what else he said in here, because I think the comments were where most of the interesting stuff happened at. So the thing that we're kind of talking about was the thought that they may start to lessen the pace of the rate increases, or start to kind of slow down on that. His exact words here was, "It is very premature, in my view, to think about or to be talking about pausing our rate hikes. We have a ways to go. Our policy, we need ongoing rate hikes to get that level of sufficiently restrictive territory. And of course, we don't know exactly where that is. I would expect us to continue to update it based on what we're seeing with incoming data. Premature to talk about pausing the hikes, and we have a ways to go." That is a very, very hawkish statement, in my opinion.
Super telling. It's super telling. And the other part that's so fascinating about that statement to me, and I keyed into another snippet of that, which is, the committee decided to raise the target rate range for federal funds to 3.25 to 4. And I think like we're starting to see some dissent within the Fed. Because leading into this announcement, there were several Fed members that were saying, hey, maybe we don't need to keep doing 75 basis points, essentially, into perpetuity. And what we're seeing from Powell today would not necessarily suggest 75 is guaranteed, but obviously that's the way it seems like he is primarily leaning. I think that it wouldn't be shocking to me to see a 50 basis points, something like that. But I think the market was hoping to hear something even lower than that potentially. I don't know. There was some conversation in some groups that I'm a part of where people were, hoping for a pivot, which I think would be catastrophic. So I don't really think we need to be in that dialogue yet. But I am a little surprised to see this 75 to 50 just laser focus right now, because and he doesn't think he over tightened.
Yeah.
And he doesn't think that they were over tightening. So to me, it just means that the propensity for this is pretty profound. And I think it's so important as we start leading into the winter, as it's like that's starting to heat up. I guess that's a inverse misnomer there. As as the effects of the winter are starting to become more profound, we're just in this insane environment right now. And this is adding significant fuel to the fire, even on a global scale. Because if you remember, after the last rate increase, we were sitting there talking about how we wanted, or other countries are saying, hey, can you guys chill out? Can you guys stop?
Right. And I think that was even asked in the press conference, and Powell addressed that. I can't remember. Can you remember what exactly he said?
No, I actually didn't watch the press conference myself. So I have to watch a video of it. I was at the gym getting swole up.
Nice.
I don't know. I had no trades on that were directly tied to the event, so it didn't really matter to me to catch it as he's saying it. But I do think everything that we've been seeing from them so far is they don't really care about the global implications.
No, and I can't remember exactly what he said, but it was something along those lines, I believe.
Which, again, it wouldn't surprise me whatsoever, seeing the way that they've gone about the approach so far. We've had some dialogue with, our brother and sister nations, and there's essentially been, ceteris paribus. There's no change.
Right.
And so this is another interesting part that I saw from the FOMC statement. It says, in determining the pace of future increases in the target rate, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. The committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities, as described in the plans for reducing the size of the Federal Reserve's balance sheet that were issued in May. So here's the deal. Not only are we going through this rate increase, but we're continuing to unwind the balance sheet.
Right.
That wreaks havoc in bond liquidity. And bonds are already not acting normally in terms of just stereotypical risk on, risk off relationships. So we have this confluence of different factors that are all coalescing together. And it doesn't seem like the Fed is really, I don't know, it seemed like lip service when they were saying that they're going to take into account the cumulative tightening of monetary policy. One of the things I don't understand is why don't they take a beat? Why don't they, instead of just keeping 75, 50 basis point increase in mind going forward into, 2023, why not come down to like a quarter for a cycle?
Right.
And just let that lagging information come through, because I don't know how they're not going to walk off a cliff here if they haven't already walked off it.
I mean, how long does the economic data lag, or at least inflation? How long does inflation lag the Fed's rate increases?
It's a great question. I think you could argue anywhere from a quarter to beyond a quarter. So it could be a couple months, depending on what extreme that we're at, or it could be, I've seen people talk about as long as, 4 to 6 months.
I think I've seen 18 even from real economists, not Twitter.
Yeah, I was going to say, because I think the problem with 18, I think you run into the issue of it's very difficult to tie things together at that point.
Yeah.
Because too much other stuff has occurred in the meantime. So you start to ruin the sample of, everything else remain relatively static. But yeah, to your point, it can be an extremely long period of time. But I mean, we should see preliminary data functions earlier than that, because it's not like the Fed is just getting a snapshot once a month and making a decision off that, right? Like they're looking at shit every single day. They're looking at flash reports, things that are coming in the interim. So again, I'm not an economist, so this is actually a genuine question for maybe anybody listening that's privy to this stuff. But I would be really, really curious as to what would the drawback be if they, again, took a beat on, or took a pause on one of these cycles and said, hey, we're going to pause the rate increases, or we're going to reduce it to a quarter to see how, the data points react. And then we will resume our protocols, reassess and resume our protocols from there.
I think this all ties into how slow they were to initially act.
I think that's a big part.
I think they took so much criticism from that now they're just afraid to be seen as being inactive or not doing anything.
I absolutely think that that's a part of it. And I also think that it's hard for me to totally assess Big Daddy J Pow's ego. Not saying that he has like a huge one or anything like I don't want to cast that on to him. Like I think he's doing his best, but it is hard for me to essentially remove that from my thought process. Being okay, well, since he said essentially that we're gonna just pound on this until it's at the inflation rate of 2%. What would he gain by taking a preliminary pause? Like maybe he would start to lose some validity,
Right.
which he already lost a ton of that. So part of me thinks that since he started slow, like you said, decided that this was the path forward, I think he might be concerned about just bouncing away from that super quickly. But again, like that's all pure conjecture. I really don't understand why we wouldn't slow down and see how the cycle data points catch up.
We've had 4 rate hikes of 75 bips, and inflation doesn't seem to be doing much to inflation yet. Like, why wouldn't you want to just maybe try a smaller one or not at all, and then see if the next month's or two's data comes in the same? Like, at least then if what you're doing is having an effect.
Because I think what you're starting to highlight, and I think this is an even more important part of the conversation, is interest rates are part of this problem. They are not the only solution to high inflation. And that's a really important part of this conversation that I think we've become hyper focused on rates. And it's because rightfully so, rates have been fucking wild over the last 2 years.
Yeah.
We've seen rates essentially at zero. And then, now we're marching right up past that. So I could see the obsession with it. But there are other levers in this, world that I think we have unemployment coming up, which I think is another figure that the Fed is fighting with because they want unemployment to be a little higher, meaning more people are unemployed. That's another part of this equation. So
that and wage growth too, they want.
Right. And I look at all these things and I'm thinking he doesn't think we over tightened, but like fucking how?
Right.
Like, if you don't think we've over tightened yet, okay, fine. We can change definitions just like we did for recessions. Why not? Makes it more fun. But like to even message that, I think is so. Does he think like we're nowhere near over tightening? Because that's kind of the way I perceive that information. And I was like,
that's kind of what it sounded like. Like he was ready to go full throttle still.
Exactly. And I thought that was fascinating, especially juxtaposed against the way that the rest of the Fed has been messaging around. Because like I said, there's been multiple Fed members that are like, maybe we could reassess and maybe we don't need to do 75 basis points, because that's what started a lot of the market rally. Because people were hearing that encouraging disposition and that, Big Daddy J Pow just pulled out his big old dick and pissed in everybody's Cheerios because I guess he wasn't having it.
Think there's any chance this costs him his job? Like who appoints the Fed president?
It's going to be really, really interesting. I'm really curious what he's trying to model himself after, because I don't totally understand what he's trying to accomplish here. I really don't. Like, I don't know if he has any sort of larger aspirations that he's trying to, show how.
Is he a Republican? That's my question.
He is a Republican.
Yeah. Okay. So we got midterms going on right now, and you're going to tank the market right before the midterms. Like, something seems a little sus about that.
Which I guess that is also completely fair. Well, he's what? He's 69 years old, so maybe he does have aspirations, but I don't necessarily think they're probably super long dated when you're nearing dying. So
I don't know. He could do 3 terms at that age.
Shit, dude, we're starting to see some political party leaders that I think they should be in fucking geriatric care, let alone leading the goddamn country.
I'm not going to get into that, but it's getting a little ridiculous.
Yeah, I'm not even necessarily highlighting Biden. I just mean the fact that there are a lot of really old people that run our government, and it's terrifying. It's like, bro, you were around during like the 60s and 70s as a teen and 20-year-old. That's like your baseline.
I know. How many old people do you talk to that have progressive views on the world? Like Like there needs to be some turnover to keep ideas fresh.
Dude, exactly. A little more representative. I
Yes.
wouldn't go everybody being young, because then you run into the
No. God,
yeah,
no.
you run into those problems. But
We were in the military. We know what that was like.
yep. So it looks like the main takeaway I got from the messaging today, it looked like they're essentially maintaining pace. I felt like they were potentially going to increase the target rate as appropriate.
Mm-hmm.
They did seem to message maybe slowing down hikes, like the progression of hikes, again, away from the 75, maybe closer to 50.
Mm-hmm.
But that juxtaposed with the higher top rates, like how do you make heads or tails of that?
Yeah, it was almost like they left the door open for either decision. It's like, we
Yeah.
will start considering this, but we're not going to slow down if the data supports it.
Dude, this is going to be just such a fascinating next quarter. It's got to be insane. Wow. I just looked up Jerome Powell's net worth out of sheer curiosity. Do you have a guess?
Let's see. With how many years has he been Fed president?
That's a good question. He's fucking old.
It's probably good because he was there when Trump was there.
Took office 5 Feb 2018 for a 4-year term.
So 4 years, 10 million a year, we'll say. So 2018, I would say about 40 or 60 million.
Fantastic guess. It's between 20 and 55 million, says Wikipedia.
Yeah, it's a lot of time to get some good insider trades in.
Dude,
Which that was specifically asked in the press conference as well, too, asking if they had a problem with ethics. Good on that reporter.
Dude, I still love Nancy Pelosi's response to that. Did you see that when a reporter asked her about insider trading with her husband?
Oh, no.
Dude, she just completely dismissed the question. Like somebody asked her, like, hey, we noticed essentially that your husband is knocking it out of the fucking park.
Right.
Is there any potential conflict of interest or insider trading? And she, not to misquote, but essentially it was just like, no, that's ridiculous. Can't believe you brought that up. And then she just walked away.
Yeah.
she just left the fucking podium.
Oh, God.
So your response is, that's ridiculous that you would even bring that up, and then walked away. And again, not saying it is or isn't happening. I don't know. I have no proof. But again, from like the military, right, we're brought up in a certain world of conflict of interest. And even if the appearance is there that there could be one, it's treated very seriously because that erodes confidence very quickly.
Right.
So the fact that we have any political leader like that just dismisses it as if it's an absurdity, as if, it's outside the realm of possibility that it might even appear that there's a conflict of interest. I'm like, bro.
Yeah, that's ballsy.
It's awesome. It is such a funny clip. I'll drop it in the chat so that you could share it with anybody that wants to check it out. It's just so goddamn funny because she's just straight up not having it and just left.
Oh, Jesus. Well, Eric, any final thoughts to leave the listeners with?
Yeah. So looking at the way that volatility is reacting to the market, volatility is up moderately compared to the move that we saw today, like very moderate. And I bring that up because we are at a point where implied volatility has fully inverted below the 20-day historic volatility, especially after today. So I just think for anybody that trades shorter term timeframes, be mindful into the rest of the week. I'm keeping risk much closer because now the market needs to go through the cycle of digesting all this information, which tends to lead to a little expansion in volatility. I'm actually surprised that the VIX is so low. So keep the risk tight.
Sounds good. Where else can people find you, Eric? We got ES Invests. We got your YouTube channel. I'll find you on Twitter.
That's pretty much it, man.
We'll have links for all that stuff in the episode description, but thanks again to everybody for sticking around to the end. Highly suggest you check out Eric's stuff. He's got some fantastic content over there on YouTube. We'll be back at you guys soon with another amazing guest episode, but until then, we got to shut the doors and go get some work done. So have a nice day, everybody.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.